If you earn income outside of your paycheck in 2025, like freelance work, rental income, business profit, or investment gains, you have one last payment due before filing season begins. That's right. The fourth quarter estimated tax payment for tax year 2025 is due Thursday, January 15, 26. Missing it could mean late payment penalties and interest before you even file your return. In today's video, we are going to slow things down and break this topic into 7 easy to follow parts. I will walk you through what each part is about, why it's matter, and how to apply it step by step. By the end of this episode, you will know exactly what to do, how to calculate your amount, and how to make your payment without stress. So whether you are self-employed, a high-income owner, or managing multiple income sources, like rental and investment, this is for you. Let's look at part 1. So before we dive in, let's get oriented. So this video has 7 parts. So part 1 explains why this payment matter for 2025. Taxes. Part 2 cover who needs to pay. Part 3 is about safe harbor rule and how to stay penalty free. Part 4 teaches you how to calculate your payment amount. Part 5 walk through real life examples. So part 6 explains how to actually make your payment and track it. And finally, part 7 tie it all together with next step and what to do after January 15th. So stay with me through the end because everything is built on the previous section. Now let's start with the big picture, why the date even matters. So January 15 is one of those quiet tax days that sneak up on people. It's not as well known as April 15, but for millions of taxpayers, it's just as important. The fourth quarter estimated payment close out your 2025 tax year. If you have earned income that doesn't have tax withheld, like consulting work, freelancing gigs, real estate income, or capital gains, the IRS expects you to pay as you go. Missing this payment can trigger penalties that grow every month, even if you pay everything in full later when you file your return. It's not about paying more taxes, it's about paying on time. Let's make this real quick with an example. So Daniel, a marketing consultant in Honolulu, earned about $1.2 million in 2025. His S corporation withheld tax on his salary, but his Maui rental income and stock didn't. So in January, Daniel had already made 3 quarterly payments, but the last one is the most important. It decides whether he's penalty free or not. For anyone earning significantly income outside of payroll, January 15 is an optional. It's a safety net date that keeps you compliant and penalty free. Now that you know why this deadline matters, let's talk about who exactly needs to pay. Let's move on to part 3. If you expect to owe at least $1,000 in tax for 2025 after subtracting withholding and refundable credit, and your payment don't meet the safe harbor rules, you are required to make quarterly estimated payments. So they include entrepreneurs, investors, real estate professionals, landlords, and even W-2 employees who have large bonuses, stock sales, or side hustle. If your income grew this year, maybe you got a big year-end distribution, sold a property, or cash out investment, this part matter even more. So in short, if your income went up but your withholding didn't, you should watch this video all the way through. Because next we are going to talk about how to stay safe, the exact rule that can protect you from underpayment penalty. So let's move on to part 4, understand safe harbor rules. So here's the good news that you don't have to get your estimated perfect, you just have to be safe. The IRS gives you 2 safe harbor options. You're penalty free if you pay either. So the first option is 90% of your 2025 total tax or 100% of your 2024 total tax. Or if your adjusted gross income is over $150K for married filing jointly or $75K for married filing separately, then you need to keep that at 110% of your AGI. That your protection zone, right? So once you hit it, you're safe, even if your final tax will end up being higher. So let's bring this to life with Daniel's example. In 2024, Daniel's total tax was $400K. So this year, is about 500K. So since his income is over 150K, he needs to meet the 110% of last year's tax. So 10% is 140K. So as long as his total withholding estimated adds up to meet this, to pay for this AGI by January 15, 2026, he won't owe any penalty. So that's how the safe harbor rule works. It's rewarded consistently. So if you are still unsure where you stand, don't worry. In the next part, we'll go step by step how to calculate your fourth quarter payment. So let's move on to part 5. So in step 1, you're gonna pull out your 24 form 1040 and look at like 24. So that's your total tax. Step 2, multiply that by 1.1 if your AGI is over 150K. And if it's under 150K, and then you can time that by 1. So step 3, add up all payments you make this year, like your W-2, withholding, and first 3 quarterly payments. Step 4, subtract those from your safe harbor target. The result is your final January payment. So let's look at Nina and Marco, 2 physicians in Seattle. They make 3 payments of 40K each. So their CPA projected their 25 tax at 180K. They have already paid 120K last year, so their tax was 160K. So the safe harbor target is about 176K. So they pay 56K in January 15, so that one payment saved them from $2,000 of potential penalty. That's how simple this is when you follow the steps. Now that you know how to calculate it, let's go over how to make the payment correctly. Look at part 6. So there are 3 reliable ways to make your payment. So first, you can use IRS Direct Pay. It's fast, free, and directly connected to your bank account. You want to choose 25 estimated tax payment as your reason and save your confirmation number. Second, you can use EFTPS, the electronic federal tax payment system. You can schedule your payment at least 1 business day before January 15 to make sure it's posted on time. Third, on the form 1040 ES, you can do it by mail. You can send it a check, but it must be postmarked by January 15, 2026. When you pay, record it in your tax planner or spreadsheet immediately. It's not just about paying, it's about having documentation. Because come in March or April, you will want every confirmation at your fingertips. Now that we have covered the basis, let's go one level deeper for those with uneven income. Let's go to part 7. Let's talk about the annualized income method. So this section is a bonus for you. This is for a high earner whose income fluctuates, like think business owners, consultants, and investors with big year-end gains. So the annualized income method lets you match your payment to when you actually earn your income. You will use Form 2210 Schedule AI. Here is the breakdown. You want to divide the year into 4 periods: January to March, April to May, June to August, and September to December. Calculate how much income you earn in each period. You want to use the IRS worksheet to annualize it and find your adjusted payment amount. For example, Adrian, a real estate developer in Austin, sold a property in November for a 600K gain. His earlier quarter was low, but the late year income increased the total tax. Using the annualized method, he adjusted January payment to catch up and avoid penalty for the earlier month. If your income spikes late in the year, this method keeps your payment timing fair and accurate. Let's move on to step 8. Don't forget state estimated tax. So many states, including California, New York, and Hawaii, follow the same federal due date. That means your fourth quarter estimated tax payment is also January 15th. You want to check your state tax portal and verify your number. Just a quick note, the 10K SOL deduction cap is to apply through 2025. So depending on the state, so some states complying with the federal right away, some states don't. So you want to check which state is in conformity with federal and how do they treat the big beautiful tax bill. So that's the big key takeaway. So let's do a quick recap. So what we have covered so far, so you can keep this clear in your notes. So in part 1, we explain what this video cover and why it matters. Part 2, we discuss who needs to pay and how to tell if that's you. Part 3, we cover safe harbor rules and how to stay penalty free. Part 4, we learn how to calculate your payment step by step. Part 5, we look at real life example, what show exactly and how it works. Part 6, we cover how to make your payment properly and keep the proof of it, like the receipt. Part 7, we added a bonus strategy for those with uneven income. Remember the annualized method. Part 8, remind you not to forget your state payment. So the key takeaway is this: the January 15 payment is your final step to close your 25 tax year penalty free. So let's look at some more story. So it's maybe a little bit clearer. So let's look at Kiana, a real estate broker in San Diego, on a 150K salary and 250K in S-corp distribution and 60K in rental income. So she makes 3 quarterly payments, totally 40K. So her 24 tax liability was 72K. So her safe harbor target is 79,200. So by making one last payment of the difference of 39,200 to IRS Direct Pay on January 15, she started 26 completely penalty free. The Kiana example sum it up perfectly. If you plan ahead, you can avoid penalties, protect cash flow, and step into the new year confident and compliant. So the deadline is Thursday, January 15, 2026. You can meet the safe harbor threshold, pay electronically, and save your confirmation. And how you finish strong and move into the next tax year stress-free. Next week, we will cover your next critical deadline, which is January 31st, and walk through how to prepare and file Form 1099 and W-2 correctly under the 2025 reporting rules. If you haven't subscribed, stay tuned, and let's meet again at the next update.